All right, Bulls and Bears. Hey there. We are back with another dose of economic reality. I wanted to make this video today to put some thoughts out there, some information and some thoughts on where we're at right now in this economy, April 7th, 2024. There's been this conception out there, I think, amongst a portion of my viewers, probably not all of you, probably not most of you, but a segment of my viewers that I'm predicting a stock market crash, that I'm bearish. Um, Nothing of the sort. I'm actually still in the stock market. I have stocks that I've been holding for years that pay out dividends. Some of them have done very well. Some of them haven't done as well as I expected. Like I've got several minor stocks, mining companies that mine gold, silver, precious metals. I thought they would perform much better. I thought that they would go up more along with what gold and silver are doing right now. In fact, gold and silver are doing very well. Last time I checked, silver was just under 28. Gold just under 23, 22 something. Doesn't matter. The bottom line is I think they're going to go much higher. So yeah, there's some stocks like the minor stocks that I overestimated. I thought they were going to do better than they are, but they're still up. I'm still up on these positions. I have sold off a lot of my stocks, so I'm not all in, so to speak, and I'm never all in. Even when the market crashes, I never go all in. Right, I'll go in very heavy during a time when the market comes down, like 2020, like a 2008, like a 2000.com crash. I wasn't investing much back then, but you get the point. I mean, every 8, 10 years, there's usually something big that comes along that brings the markets down, but it doesn't keep it down for long because what happens, they pump a whole bunch of new money into the system, into the economy. The markets go back up, banks recover, people are able to borrow more money, take out loans. The economy then continues to chug along. All I'm saying is be prepared for the huge one. You don't want to be all in, for example, on the stock market when the next big drop comes, and there will be a big drop. And I think the risks right now are very, very elevated, right? So that's all I'm saying. I'm not saying run for the hills. There's going to be a crash. There's going to be a correction. There'll be some big scare situations that come up. And I think later this year, I think this year at some point, you're going to see something big jump out of the shadows, like a 2020, where a lot of people are going to be shocked and surprised. And we put the different scenarios on the table on what those things might be. But just look globally right now at all the risks right now, all the hostilities in the world, the levels of debt. I mean, that's another thing as well. The banks, I think, at the end of the day, a few of the banks will survive. The biggest banks will survive because they've been given a basically a lifetime liquidity injection guarantee. Right? They're just creating this money and keeping these banks propped up. Right? So you're never going to see a complete implosion unless you see the system of money completely get shut off, which I don't think will ever happen. But there will be ups and downs along the way, right? Well, let's get into some news here because there's definitely some more signs out there, signs of the time, as I like to call them. We've got more layoffs here. This is coming out of the Geek Squad, or the Geek Squad's getting laid off. I should say the Geeks are having to find different lines of work, maybe. Best Buy Geek Squad employees report mass layoffs. Former employees of Best Buy's in-house tech support and repair team, Geek Squad, say there were mass layoffs this week, and apparently the numbers aren't out yet. But we've seen, a lot of layoffs occur. But yet, when that happens, the jobs numbers get stronger. Why? Because people that lose their full-time jobs, a lot of times they're going out and getting multiple part-time jobs just to make ends meet and not even getting laid off. Some people aren't getting laid off, but they're still forced to get another job, second job, third job, side hustle, gig economy job, just to make ends meet. So, of course, the jobs numbers look better with everything that's happening, right? A lot of the numbers that are reported are revealing things or portraying things just the opposite of what they really are. Economic weakness and people struggling to survive, taking on more jobs, gets put out there as a positive news item in the business world, right? Look at the jobs numbers, look at all these jobs. In the meantime, the jobs numbers could go up again next month because people are struggling to survive, more people having to enter the labor force, more people even unretiring. In fact, we had a record year, 2023, people taking money out of their 401k accounts. So a lot of different things are being done for people to keep their head above water, and it can't last forever. That's why I'm always saying prepare for the breaking point. But in the meantime, um, invest. I remember when I accumulated my first 1,000 ounces of silver. I said, okay, wow, silver is going to be $200 an ounce. I'm going to be doing pretty good. I'll have all this extra money on the side. Silver's $27. So there's some things that I severely underestimated, but it doesn't mean that I won't be right here as far as precious metals goes. I mean, look at everything else I've been right about. Sometimes you just have to wait, and eventually things will come to fruition. And I think those of us that are cautious right now and not all in on the markets, knowing that there could be some big drop, 2020 2.0 coming up here at any point, at some point, very soon. But I think a lot of us are going to be heavily rewarded for being a little bit cautious. You know what I mean? For not being all in on the markets. To those that are all in and you're riding the stock market up, congratulations to you. I would just say be cautious and have some fresh powder in case you see tremendous buying opportunity. The times I've made the most money have been times of market turmoil, right? And maybe that's because I've been a little bit more cautious than others. 2008 was a huge turning point in my financial ventures, if you want to call it that. Bought two homes, went in on real estate in 2008, 2009, 2010 was the year I actually made the purchase, but it stemmed from the 2008 market correction where I was able to get in and get into the real estate investment world, right? Well, one's a primary home, so not really an investment. But then again, if you look at the way homes have went up, it is an investment if you buy at the right time. And even now, you could buy now, and if it still pencils out, you could still buy a home at today's prices and rent it out for income, for profit. It's getting more and more difficult though with the home prices and with people's budgets being squeezed. In fact, rents actually came down a little bit. So another thing I would encourage, caution on buying real estate at this point. But some people will be just fine. I know people that bought real estate this year and last year, and they're making 200 something thousand a year, 300,000 a year. I think they'll be just fine, right? So just because I say I would urge caution doesn't mean that everyone out there is, under the same. I'm not putting everyone under the same blanket, right? It's different for everyone. That's why you hear people like myself, YouTubers, people talking about the economy. We say this is not financial advice, right? It's impossible to give advice out there that's going to be a blanket statement for everybody, right? Some people will be fine buying a home right now. Some people buying a home right now in 2024, it's going to be the worst move they've ever made, right? Uh, that's what I think is going to happen, this year. Could I be wrong? Could there be hyperinflation? Absolutely. They could completely throw so much money at this economy that you're going to see these bubbles get bigger. In fact, here's a piece of news that I think some of you will not be shocked by, but some of you will be. What's happening over in Hawaii with home prices here? Maui's median home price hit 1.3 million in March, up 9.5% from 2023. What's one of the things that I said was going to be inflationary with home prices? It's going to be shortages and inventory destruction, right? We had the massive fires, and we're seeing this inventory destruction happen in a lot of different states with the fires in California. You're seeing insurance costs skyrocket because of it. Folks, the things I say here, I'm not just guessing. I'm not just pulling numbers out of thin air. There's reasons behind these. And I think I might have been the only channel here on this entire platform telling everybody that the housing bubble would not go bust. In the meantime, other channels are out there making, 100 times more money than I'm making because they get so many more views because people want to believe that there's going to be a housing market crash. Could there be a crash? Absolutely, but not until the system of money gets choked off to prevent people from buying the home prices where they're at right now. You also have to stop investors and institutions from buying homes. That would be a big deflationary event for housing if that were to ever happen, if they were to ever pass that law. That's another wild card that's out there that could be a big deflationary time for housing. I call it a wild card because it may not happen. It could, but I don't think so because a lot of the lawmakers that allow this to go on with these companies buying up homes, they're also getting rich a lot of times from these same companies. If you know the way politics works, you know exactly what I'm talking about, right? I don't have to go into that because that these politicians, they end up leaving their office or leaving their position sometimes after 30, 40, 50 years, multi-millionaires, right? Not because they're great investors, not because they get paid that much at these positions. It's because they're in the right place and they know how to take advantage of their positions, right? You know exactly what I'm talking about. I think most of you do, anyways. Let's get into this here. Another near miss cyber attack puts U.S. officials and tech industry on edge. So apparently there was a thwarted, another big attack that would have brought down who knows what. I'm not going to get much into it, but my point is the threats are out there. Have some powder dry. Be ready to invest because sometimes when there's a big shock to the system, so to speak, that's a great time to make money here. Interest rate outlook. More experts see no rate cuts. So let's talk about this. No rate cuts. Well, we have these numbers that are put out there, these jobs numbers that people are um, taking in as good news, as a strong economy, when actually it's just the opposite. You have more people out there desperate to survive, taking on more jobs. But the central bank, they're looking at these jobs numbers saying, wow, we better not cut rates because the economy is so strong. Look at these jobs numbers. You think they really don't know the reason why these jobs numbers are looking so high? Maybe they do, maybe they don't. But the bottom line is, if those are perceived as strong economic indicators, then you may not see the rate cuts. And that's going to be a negative for markets too. Look what happened to the stock market this past week. We had one of the worst weeks in a year, all because of the hope of easy money um, darkened, right? It darkened because the central bank was out there saying, wow, we might not need to cut rates because the economy is so strong. And that was negative for the stock market. Why? Because the stock market lives and thrives on more easy money down the road. People out there, institutions out there borrowing money at hopefully cheap rates, hopefully to make a return. But when that promise of easy money gets yanked away, look at the reaction in the stock market, right? So it could be just the tip of the iceberg, folks. There could be lots of other things to bring this down. But in the meantime, I'm still invested in the markets. I'm still every month getting some dividends and making money off of the stocks. And if there's a crash, sure, I'll lose temporarily. But then if you have your powder dry, you can go in, buy a whole bunch more at the bottom, whatever your investment may be, and you're going to be much better in the long term. So all I'm saying is use caution along with investing. And we're going to wrap this up, folks, here. I got one more article, though, I wanted to bring up here. This article here at Yahoo, quote, blows my mind. North Carolina woman has paid $50,000 towards her car payments and barely reduced her $84,000 loan. Folks, that's because at 7 and 8%, if you've got an $84,000 vehicle, at the end of that loan, if it's a 72-month loan, you're going to be paying over about $20,000 just in interest. So people are shocked at how slow the balances are getting paid down, even at a 7, 8% car loan interest rate. It's a pretty dark time for a lot of consumers. And I still think we're going to see a big bankruptcy storm. That's one of the black clouds I see on the horizon. And there's lots of black clouds. If you've been on this channel, you know I'm always on the lookout on the cautious side for black clouds. And that's all I'm saying is be cautious, but still, invest. And not that we're greedy, not that we're trying to get rich, but to a lot of people, it's survival, right? Having money is survival. Paying your rent, paying your HOA fee every month. To those who have an HOA, homeowners association, paying your, of course, your mortgage, keeping your lights on. It's about survival for a lot of people. It's not just about investing and being greedy. Some of us out there, sure, we're investing to try to make money, but at the end of the day, it's survival. If you have a family, you want to have money. You don't want to go broke. You want to know what's happening with the economy, where to invest. You want to look out for risks, all that. That's what we talk about, right? That's the purpose of the channel, right? So hope everybody liked this report today. What do you think about the Maui home prices going up by over 9% year over year? Outrageous, folks. What do you think about the big pullback in the stock market? Is it going to continue with the promise of easy money and low interest rates or rate cuts being yanked away? What do you guys think about that? What do you think about the Geek Squad layoffs? Dark days for Best Buy. They've already had a lot of locations closed down. Best Buy and a couple cities around me is closed. I think there's only one within like 10 miles now from where I live, right? So keep stacking, folks. Keep cautious, and we'll see you in the next video. Bye, everybody. Peace.